August 2022 Toronto Real Estate Market Report. Is there any good news to talk about? In this video, I want to look at the real estate market from a micro and a macro level. Let's go.
Okay, let's take a look at the micro data first, and then we will look at the data from a macro high-level perspective. So from a micro level, I'll quickly go over this because I am sure you've seen lots of publications in the media, social media, all over the place. But very quickly, sales are down compared to 2021, and again, this correlates, which I will discuss about when it comes to the macro level. But numbers are down compared to 2021, and obviously with the higher interest rates, things have changed since March of this year. A couple things to look at. You can see for the 416, again for the city of Toronto, the composition of sales, the condos 1,000, and then if you look at the detached semi-townhome, they're about 700-800. So it's a 55-60% to 40% split of condos. So condo prices do have a big impact on the average price. This is why I'm not a big fan of average price, because city is obviously big, very diverse. Condos behave different than detached, than semis, and location does matter. So even on the detached for the 416, for example, it says the average is 1.65 million. I can show you houses with very big range, 3.3, 3.5, 4+ million, or under the 1.6. So it depends on the location, on the condition. So the point here that I want to drive, don't focus too much on the average, just take that with a grain of salt. I'll jump to the, let's stick to the micro level. So here's data that I track, and I break it up into 3 sections. You have the detached in this 416 in the city, semi-detached in the city, and again, this is all of the city. And then condos, I look at the central area. So not Scarborough, not Etobicoke, not Yonge and Shepherd, Finch area, but more of the core condo regions. 2 things that I look at is the light green is the months of inventory, and then the bars are this is the average price. And the correlation here, as months of inventory increases, then prices tend to come down. Now, it's 1 point, and this is a bit surprising, August 2022, you can see the detached in the 416, the months of inventory dropped, and you see that increase in price, which is a bit surprising because usually July and August, people go away on vacations. There's been a lot of traveling to Europe, overseas this year, cottages, and quite frankly, this is the first summer in the since 2020, or I should say since 2019, where it felt quote unquote normal, where people have traveled and conducted summer holidays as the old days in 2019 and prior to that. So 1 month of data, it's not an indicator, but it's interesting, keeping in mind that in July, the Bank of Canada went up a full percentage point when it comes to benchmark rate. They recently announced on September 7th another 3/4 points and probably more hikes moving forward. But it was pretty interesting to see the detached in the 416 prices went up, months of inventory went down. But 1 point of data, let's see how that's going to play out in September, October, and November as we move forward. Now, in semi-detached, again, the months in inventory was rising, and this is when the Bank of Canada started the increases. Now, keep in mind, March in 2022 till now, the Bank of Canada has gone up 3 full percentage points. I don't even know if this was ever done, historically speaking, but we're looking at 30-40 years of uncharted territory where they've gone up 3 full percentage points in 6 months time frame. So you can see the supplies increased aggressively, and again, August it dropped. We didn't see a change in price in August, but again, let's just see how things are going to play out in September, October, November, and the balance of 2022. For the condo market, again, the months of inventory gone up, same trends. March, Bank of Canada goes up, 3 percentage points. You can see the supply goes up and prices came down. And again, the supply months of inventory dropped in month of August, and let's see how that's going to play out moving forward for the rest of the year. So is it, I don't know, buyers adjusting? Is it not? It's difficult to generalize and make a statement to say this is what's going to happen, but obviously it's one data, one reference point. But I don't know, maybe buyers are saying it is what it is, and if I need to buy, I need to buy, and we'll see how that's going to play out again. Now, if you look at this chart, actually, let's jump back to the details. From a macro level, let's jump to the macro level. Real estate goes up over the long term. There's just no question. You look at data from 40, 50 years ago, 100 years ago to now, things got, prices have gone up. Population growth, people need housing. Now, as population grows, yes, could be less people buying, but then that pushes more people to rent, and then the pendulum swings. When people can buy, less people rent, and so on and so forth. Now, look at it from the macro level. I picked here, I said, let's look at detached August 2018, August 2019, August 2020, August 2021, and then August of this year, 2022. And I wrote the numbers down. You can see it was pretty flat from 18 to 19, and then, the big spike happened 2020, 21. And then 22, things have dropped compared to last year. But this 32% figure, again, look at general trend. We're right now, this is detached 416, 32% higher than 2019. Now, that's still a big jump in price. It was higher percentage-wise in August 2021. So that is 1 year where things were completely abnormal. I mean, I would say the last 2 years, with extremely low interest rates, money flowing into real estate, people buying, renovating, and buying and investing and all that type of stuff. But if you look at the general trend, it does go up. Sure, we're gonna have the highs and, if you want to call it lows, bumps down, but the general trend, it does grow moving forward. So keep that in mind when making those decisions. Similar trend here, condo market may be a little bit more flat. You can see it's 18, 19, 20, things have gone up and then went down a little bit. But generally speaking, if you look at August 2022 compared to August 2019, it's up by 7.5%. So it's still up, not as much as detached. And again, there is no land to build freehold detached houses. And this is why you see, detached was very strong appreciation compared to the condos downtown, because they can still build, although it's getting much more difficult, much more expensive to build. And I believe condo prices will skyrocket moving forward once the economy settles and things get back to normal. So this is the overview from a micro level. I'll continue with the macro here. What I want to show you in this page, or this data here, is the big picture. If you look at the sales now since 2010, 85,000, 89,000, and this is all of the Toronto real estate region board. So you can see Burlington, Oshawa, up to Bradford, Georgina areas. All those sales are included. The biggest numbers were 2016, 113,000. Last year was absolutely crazy. It smashed the highest number in 2020, and again, 2020 was not normal because we had 2 strong months. Half of March was decent, and then everything shut down until June-ish, mid-June, and then things picked up. So you can see 2020, 2021 completely abnormal just because of what had happened. And this year, I think we'll probably end up around 75,000 sales. We'll see how things are going to play out in the next 4 months, but somewhere there, maybe 75,000, which is pretty low. And again, that's driven by the aggressive increase in interest rates. Now, yes, sales will be lower this year compared to last year. It's going to be all over the media. I don't know, 30, 40% sales drop, who knows, whatever. Massive double-digit decrease. But again, they're comparing to an abnormal year. I mean, let's look at the last 10, 12 years. You can see it will be, I think it might be lower even. But anyway, you can see it's 85, 89, a lot of 80s, some 90s. 2018, this is when the year after the foreign buyers tax, things went down to 78. Yeah, sales will be down. Real estate is highly rate sensitive, but I do believe that the buyers will come back once the Bank of Canada is done increasing interest rates and things settle from an economic perspective.
Here are a few factors I'm looking at moving forward. 1. Bank of Canada benchmark rates. There are two more announcement dates in 2022 on October 26th and December 7th, where it's expected further increases will take place. Until the Bank of Canada signals there won't be additional interest rate hikes, buyers will sit on the sidelines. 2. Inflation. There is still quite a bit of room to come down to the 2 to 3% target range from the current levels of 7.5%. 3. GDP. The second quarter GDP was 3.3%. This gives breathing room for the Bank of Canada to be aggressive in its rate hikes. Now, who can benefit in this real estate market? Let's look at two groups who I believe can take advantage of the current real estate market conditions. First is move-up buyers looking to buy a more expensive home. Yes, they will sell their current home for less than what they would have gotten back in January or February 2022. However, the savings on the larger purchase price would outweigh the lower selling price of their current home. 2. Real estate investors. People need a roof to live under. Interest rates are driving a higher percentage of people to move from buyers to renters, pushing up rental prices. Keep in mind, due to high interest rates, more capital is required to offset the higher carrying costs. Hope you found this video informative. If you're looking for specific information relative to your area, reach out and I'm happy to help. Check out this video where I discuss the 3 reasons why now is the time to invest in real estate. And until next time, happy investing.